Bitcoin Trend 10 to 14, March 2025 by Hoteliercrypto. Our analysis has been fairly accurate this week. Some data turned out to be correct, while some got revised. But one thing I've always noticed, Trump never wants to be blamed for bad data. It's always easier to blame the previous government. Our chart predictions were pretty spot on. In terms of data, Caixin manufacturing in China increased as expected. U.S. manufacturing PMI dropped as predicted. ADP, which I inversed, was wrong. Factory orders, which I predicted would fall, were wrong. Think about it. Factory orders are up, yet employment is down. I should have inversed factory orders, not ADP. Then, claim data rising was correct, and NFP dropping tomorrow seems very likely. The trend lines matched up well. When I write this Bitcoin diary, it's for myself, a way to learn and understand the market better. My goal is to improve and become smarter than I was before. Next week's data. Let's break down the key events for next week. Monday, 10th of March 25, 14 UTC, CB Employment Index. There's already a Conference Board Consumer Confidence Report, and now we have the Conference Board Employment Index. If it rises, DXY goes up. If it falls, DXY goes down. No need to inverse Trump's data. You saw what happened when I tried to inverse ADP and got it wrong. The key to understanding Fed movements is knowing 1. When unemployment rises, 2. When inflation drops. Inflation has dropped, though not yet to 2%. So the main focus now is when unemployment rises, and we're already seeing it in ADP, claim data, and NFP. If CB Employment Index rises, Bitcoin doesn't necessarily drop because this data is about the future. If CB Employment Index falls, Bitcoin goes even higher. Why? The Fed's mandate is to create jobs and maintain economic stability. Unemployment is already rising, so the Fed will have to inject liquidity to keep things stable. Isn't that a sign that more stimulus is coming soon? Here's what Monday's candle might look like. Tuesday, 11th of March, 2025, 14 UTC, job openings. Reminder, the JOLTS data released in March isn't from February, but actually from January. With tariffs, deportations, and budget cuts in play, it's logical that job openings will decline. If JOLTS drops, DXY falls, Bitcoin rises. Here's what Tuesday's candle might look like. Wednesday, 12th, 2025, 1930 UTC plus 7, U.S. inflation, CPI. There are two ways to bring inflation down. Increase the number of holders by adding liquidity or reduce the number of holders and cut liquidity. President Biden chose to increase the number of holders by bringing in immigrants and giving them money. That's the first method, more holders and more liquidity. On the other hand, President Trump reduced inflation by cutting down the number of dollar holders, but without reducing liquidity, so the number of DXY holders automatically dropped. That's why immigrants were deported. But did inflation actually go down? No. Why? My question is actually simple. Did Trump cut down liquidity with Doge-like spending reductions? The answer is no. Trump's government spending remained just as high without cuts, while layoffs, cost-cutting, and deportations were intensified. So the number of dollar holders decreased, but dollar liquidity didn't. Hence, DXY went up. Did inflation drop? Don't focus on CPI. Look at core CPI. If core CPI rises, it means inflation is up and DXY goes up. That's just natural law. In a normal situation, the Fed should remain hawkish, sticking to its stance of maintaining economic stability by tightening monetary policy. But what happens if core CPI rises, yet the Fed can't stay hawkish because its second mandate to create jobs has been wrecked by Trump's tariffs and cost cutting, which led to layoffs and rising unemployment? The Fed wouldn't be able to stay hawkish because its mandate is under threat. So if core CPI goes up, Bitcoin goes up. Why? Because the Fed would have to turn dovish and cut interest rates to get jobs back. Trump is smart. He's making sure the supposedly independent Fed remains independent while yet still follows his agenda of cutting rate. Clever move. Here's what Wednesday's candle might look like. Thursday, 13th March, 2025, 1930 UTC plus 7. US PPI. Remember, the Fed's preferred index isn't CPI, it's PPI and PCE. Core PCE has already dropped from 2.9% to 2.6%. CPI reflects consumer inflation, while PPI reflects producer inflation. If factory prices go up and personal spending drop, it means people are struggling and need government help to boost liquidity again. In short, stimulus is around the corner. China's stimulus has already kicked in. If the US doesn't follow suit, investors will flock to China instead of the US. Why? Because China has excess liquidity while the US is running dry. From a business perspective, investing in China is more attractive. Cheap labor, easy access to third world markets, and strong government support. Meanwhile, investing in the US means expensive labor, weaker local currencies due to dollar exports, and heavy government interference in various sectors, all while markets are struggling with liquidity shortages, just like Europe, Canada, and the UK. If PPI rises, DXY rises. But what if PPI goes up and DXY doesn't? That means dollar liquidity hasn't increased because the debt ceiling hasn't been raised, and the Fed can't stay hawkish. Here's what Thursday's candle might look like. Friday, 14 March 25, 1930 UTC plus 7, UNMICH. The University of Michigan predicts inflation will rise. If inflation rises, the Fed should remain hawkish. But if inflation rises and the Fed can't stay hawkish, Bitcoin will go up. Why? Because that means the Fed is moving closer to easing monetary policy and increasing the money supply, pushing Bitcoin up. Bitcoin thrives on abundant liquidity. When liquidity dries up, like when interest rates are high, money becomes harder to find. Floating mortgage rates force people to save more because their repayments go up. If someone was paying $10 million before and now has to pay $13 million, they'll cut back on spending. This slows down the flow of money. Raising interest rates is basically like burning coins. When mortgage rates go up, payments increase, but your house doesn't get any bigger, yet you're paying more. If you were paying $10 million before and now it's $13 million, that extra $3 million is effectively burned and sent back to the central bank. Here's what Friday's candle might look like. Remember, this is just my opinion based on my best knowledge. You've already seen my mistakes, repeatedly and clearly. Using me as a reference is a mistake, but stopping me from sharing my thoughts isn't democratic. I want to keep creating, even if I'm wrong, because that's how I learn. Always do your own analysis, and buying or selling is your personal choice. Following me will definitely get you stuck, and for a long time. This is not financial advice, nor is it buying or selling advice. This is simply my opinion, just like anyone else's right to share theirs. If you found this video helpful, feel free to like and subscribe. And if you have any questions or want to discuss something, drop a comment below. Disclaimer: investing in crypto assets carries high risks, and any investment decisions you make based on recommendations, research, and information are entirely your responsibility. No institution or government authority will be responsible for the risks associated with these investments.